Okay, family. Hope everybody is good. We are going to record. Wow. Okay. More and more people come in as we get started, which is great. Which is great. I hope you're all good, and I hope you've all had a fantastic week studying and learning hard. We are going to jump straight into the questions that we've been asked this week, and this whole session is Money Mondays, dedicated to really just to helping you with your FX. Now, I know some of us on the chat are HFX specialists, and I love HFX actually. And I found that for me, knowing FX really helps with my HFX when I start looking at it. So it's very cool to know some of these strategies in FX because it translates directly over onto HFX. But also, if you're just trading on FX alone, some of the stuff that we're going to talk about tonight is going to be incredibly helpful. So we're going to do this every single week, man. Every single week we're going to be on here. We're kind of deciding between 6 and 9 o'clock at the moment. We're playing between 6 between 6 p.m. London time and 9 p.m. London time. Part of me wants to move it earlier so I can get all of my Seychelles family on. I know it's late out there. But of course, we want to fit within the ICE schedule and make sure that we kind of slot into the trading time slot, which right now is at 9 o'clock. So leave that with me and Montel for a little while longer, and we are definitely going to get the right time for this and get a little bit more consistent with that timing. Okay, we'll see. I'll let you know next week what time we're going to be, but very soon we will be consistent. Okay, so thanks to everybody for joining this week. We're going to get straight into the questions. Rob, I know you don't have too long. You've got to pop out, and I also know that it's like 1 o'clock in the morning out in the Seychelles. So let's try, only because you sent your question in first, let's handle your question, Rob, and then we'll move from there. So just what was the first one that you had asked? Let me try and bring it up on WhatsApp as well.
Sorry, mate, let me just find it on there.
Sorry.
Okay, so when looking at the charts, 1 hour, 2 hour, how far back should we go to get find our swing lows and our swing highs?
Okay. Great question. So let me repeat. You said when looking at the charts, 1 hour, 2 hour, how far back should we go to get the swing lows and the swing highs? Okay, let me show you my chart. Let's start with showing you a chart, and I can tell you the way that I do it. It doesn't really matter what chart we're looking at, to be very honest. At the moment, we are looking at the sterling yen, which is the Great British Pound against the Japanese yen. We're looking at it on the 8-hour time frame. If we jump down onto the 1 hour time frame, then you can see naturally where your eye is drawn to. Right? You can see naturally where your eye is drawn to. So I would say a couple things with this answer. It really depends on how close you're looking at the chart, because now you can see that the date we're looking at is from the low is from the 26th of January, which was only what, 2 weeks ago? Maybe it was 2 weeks ago, 26th of January, and the high just happened at the end of last week. But as soon as we start to zoom out a little bit, then we're going to get additional information immediately just by zooming out a little bit. We found on the day before, we found another lower, well, from this it will be a lower low, but actually it's a higher low from the previous one. We zoom out just a little bit more, we go 2 days earlier, we can find another low. So what I would say is that on the 1 hour and 2 hour time frame, you just have to go from what looks obvious and what looks sensible. If the trend is really continuing consistently, like upwards or downwards, like we have been seeing in sterling yen, you might have to zoom out quite a long way to get a sensible low. Look at this. We have zoomed out all the way out to now we're in December. We've zoomed out all the way in December. And if anybody uses trend lines, I don't think many of us do use trend lines. You can clearly see that we're an uptrend all the way from the 21st of December. So I'm zooming out and out as far as possible, but this starts to look a little bit now, okay, you can't get a trade idea from that. You actually can't get a trade idea when you're looking at it this far out. Let me just make a note. This is from me. Okay, so you can't get a trade idea when you're looking that far out. So what I would do, I would literally just reset the chart. You can see a natural low here, and then just zoom out to what is actually sensible. To be fair and to be honest with you, Rob, to be fair and to be honest with you, let me just see the chat box. Okay, wicked. All right. To be fair and honest with you, I wouldn't start from looking at the 1 hour or 2 hour timeframes. I think some of us have discussed this previously. I would always start from the widest possible time frame, so that I can get a very clear picture of what the trend is that we're currently looking at. And of course, rightly so, we are currently looking at an uptrend in sterling yen. We're currently looking at an uptrend in sterling yen. So I would start with the widest possible time frame. This is the way to do it. It's called top-down analysis. You start with the widest possible time frame. What are we looking at on the widest possible time frame? Then you go in and in and in until you get the current time frame that you want to trade on. Now, different time frames can show you different viewpoints, right? Different time frames can show you different viewpoints. Imagine that we was to cut the chart somewhere about here, right? So we've gone back in time now using the replay tool. Well, the daily chart will show you that we're clearly in an uptrend, all right? That's what the daily chart will show you. But if you zoom in to the 4-hour chart, well, what does that show you? The 4-hour chart shows you that we're in a downtrend. So you've really got to start with the widest possible time frame, and then you zoom in and in and in until you find yourself a trading opportunity. And clearly on the 4-hour time frame, this would be the one that you mark as your swing high. So you want to go for ones that look sensible and look obvious, and mark those on the chart. Now, we've spoken about when you're going in one direction. Also, the thing to think about is, where is the reversal? This is a really key point, right? Going in one direction, it's kind of a little bit harder to find your starting point on the 1-hour, 2-hour time chart, because you're just really going in one direction. We know that's an obvious swing high. But what you also want to be looking for on these charts, you want to be looking for on your time frame, is there any obvious area of reversal, right? Is there any obvious area of reversal? So let me just clear this off just a little bit so that we can look at it a bit more sensibly. Well, on this 1-hour time frame, you can clearly see, as clear as possible, that there is a very definite area of reversal on the lower time frame, right? You can see it. So in short, Rob, my answer to you would be this. You've got to look at two different things. Number one, if you are in a trend, either an uptrend or a downtrend, just zoom out to start with the widest possible time frame, go down into the time frames, and when you get to the 1 or the 2-hour, just start with whatever looks sensible. Keep in mind, very important, keep in mind the longer term trend, because the longer term trend will always dominate the shorter term trend, always. So you must know the longer term trend, even when you get into a shorter term time frame, a shorter time frame trade. So if you're going in one direction, just do whatever looks sensible, zoom out and zoom in until whatever looks sensible. If you can spot an obvious reversal like we've been able to spot on this Aussie Kiwi chart, then you take that reversal as the key point of where you're going to start from. And you can see very, very clearly on this chart, I've got it as a higher high here, but really and truly, this would be a swing high. We can delete that and we can call that as a swing high. Does that answer your question, Rob?
Yes. Yeah, man. Yep, wicked.
Before I move on, does anybody have any questions on that? Because actually, this is a really nice segue into Alison's question, which was about Fibonacci. So we can handle that even before we go to your second questions. Okay, no, I'll answer your second question super simply, Rob. Your second question, what are the lines that I see on the chart when watching videos, right? Okay, we can answer that super quick. Those lines are what we call moving averages. Right? I don't know if anybody has studied moving averages, but a moving average just simply takes a calculation of where the price has been before over a set number of periods. So if you're looking at the 1-day chart, the 8-period moving average would take an average of the last 8 1-days, and it would plot that on the chart, right? And then the next day, it would take the average of the last 8 1-days, and it will plot that on the chart. And the next day, the last 8, it will plot that on the chart. And so what you get is you get an 8-period moving average. I don't know if you can see that line. If I make that line a little bit bolder, you can actually see style, ba-bam, ba-bam, ba-bam. Let's make that line a little bit thicker. Okay, so you can actually see that there's a line running through there that plots the 8-period moving average, right? Now, the fact that we're looking at the hourly chart right now, it says over the last 8 hours, this has been the average price. Boom, it makes a plot. over the last 8 hours, it makes an average price, boom, this is a plot. Over the last 8 hours, boom, this is a plot. And so every single time you get a line which shows you the moving average. Now, what's very, very clever about these is you can use a combination of these moving averages to give yourself information. For example, this is going to be really nice actually. I use 8, 13, and 21 period moving averages. And I use those moving averages specifically for a reason, which I'll come to a little bit later on. Okay, so if we put the 21 period moving average, we can see that sometimes they work together. A nice time to enter a trade is when you see the shorter time frame moving average cross over the longer time frame moving average. You can see that when the 8 period moving average crossed over the 21, that we went into a nice downtrend, and we saw resistance from the 21 and the downtrend continued, right? But as we've seen the 8 period moving average cross over, now the moving average acts as an area of support. Now, I don't trade with moving averages, but as you can see, I had them ready on my chart. So if I need a little bit of additional information, then I can just go and click on the moving averages and I can get a little bit of information on them. Very, very, very good as an occasional confirmation, as an additional confirmation to whether or not you're going to get in a trade. I do like moving averages, but please remember, everything that we use on the chart, whether it's going to be a stochastics, which we use a lot in HFX, whether it's going to be a RSI, whether it's going to be a moving average, please remember that all of these things, I'm going to clean up this chart just a little bit, all of these things react to the price. Very important. All of these things are responsive to the price. And so they are what we call lagging indicators. This is really key. They lag the price. They can only give you that piece of information once the price has already been there. And so it's really, really important for us as traders that we spend most of our attention understanding what the price is doing. This is my view anyway. We spend most of our time and attention understanding what the price is doing, because the price is the leader. The price is the most important thing. And all of this stuff, stochastics, RSI, which I keep it hidden most of the time, the volume, brilliant tool every now and again, just as a double check. The moving averages, very good tools, just as a double check. But of course, these are all things that respond to the price. Much more important for us to know what's happening with the price itself. Right? Did that help?
Yeah, that's cool. Wicked. Thank you.
Yeah, so to find them, let me show you how to find them. You go into FX here, you go into FX, and then you just type in best to use exponential moving averages. I'm not going to go into the difference between exponential and simple moving average, but just use the exponential moving average for now, and that's probably the best one for you to use. Okay, that's probably the best one, exponential moving average.
Lovely.
All right, all right, all right, all right. Now, I like the 13, the 8, and the 23. Those are the moving averages I tend to use. I also like 55-day moving average. That's a very good one. 55 is a really, really good moving average. Okay, so listen, this actually moves really nicely. What we've done so far today moves really nicely. And I knew this when Alison asked her a question about Fibonacci retracements and how to use it. I was like, wow, the two questions that Rob asked plus the question that Alison asked actually goes really, really well together for this session. And I'm telling you guys, if this session is done in 25 minutes or is done in half an hour, absolutely cool, absolutely cool. No problems with that. We do not have to use up the 1 hour time frame. I'm not here to you've got the IM to teach you all this stuff. This is really kind of here as a support group to make sure that you can get your questions answered. So Alison's question. Alison, are you there? Do you want to ask your question so everyone can hear your lovely Seychelles accent?
Can you hear me, Leon?
I can hear you loud and clear, yeah.
Great. So basically, I was asking about the Fibonacci retracement. So number one, how to actually draw it properly, because I've noticed that if I don't draw it properly, then it goes all wrong.
Sure.
And number two, I've noticed that not all the lines are needed in it, but just probably the 618, the 88, and I believe it's the 76. I'm not entirely sure. So how to draw it properly. And this morning I must have heard something about it respects the 76, and if not, you just wait till it respects the 88. And if you do that, then it's like you're moving with the way the banks are moving, something like that. So
Yeah.
just the whole rationale behind it and how you can use it profitably to take trades.
Okay. All right. All right. All right. All right. Alison, I love that question. Let me just leave a marker for myself. I'm trying to see with my eyes something here. Okay, cool. Cool. Sorry, just bear with me. I just found this chart, which is actually quite nice. I'm going to come back to this point here. This point here. Absolutely brilliant questions, right? So this is on, look at that. Okay, beautiful. All right. So. Do you know what Fibonacci is? Do you want me to go into what Fibonacci is? Or do you kind of understand what it is? Do you think that's too detailed? What tell me how deep you want to go on Fibonacci, because it's actually kind of cool if you want to get geeky.
It depends on you, like just how it would benefit the trading aspect. I mean, if it's too long to go into what it is, just how to draw it and the lines to actually look up for.
Let's do 2 minutes on what it is, or 3 minutes on what it is.
Okay, cool.
It's kind of super cool, right? I don't know if everybody knows it, but while we're on here, it's kind of super cool, geeky stuff. I like it. We don't have to know this bit, and I'm not going to get too deep on it, right? It doesn't really matter, this part. It doesn't really matter, but it is kind of cool, right? So all Fibonacci is a sequence of numbers founded by an Italian mathematician many, many years ago. And he's like, oh my God, I'm so geeky and cool. I just found out that if I add a sequence of a sequence of numbers together, they will give me something kind of special. So he added 0 and 1, and 0 plus 1 equals 1. So he put another 1. Then he added 1 and 1 together, and he's like, oh, okay, cool. So 1 and 1 added together equals 2, and so he put a 2 here. He's like, okay, let me add the last 2 digits together that are in the sequence. He added 2 and 1 together, and he got 3. And he just kept on doing that until you get 5, then you get 8, then you get 13, then you get 21, then you get 34, then you get 55, then you get 80, what is it? Then you get 89, okay? And we can stop there, right? So 55, 89, we can stop there because I can't quickly work out what 54 and 89 is, 141 or something like that, right? So let's do that. That is the actual Fibonacci sequence. NAA Fibonacci sequence. That is how you actually work it out. Okay. Now, what's super cool is that what he started to do as these numbers got longer and longer and not longer, I've got no idea why, but he took the last 2 digits and instead of adding them together, he divided them together. So let's just take 89. Let me take, where's my calculator? Let's take 89 divided by 54. I've got a calculator here every day on my desk. So 89 divided by 54 equals, let me show you. Wow, this is so cool. Equals 1.618. It's really, really cool. If you added the next number, 54, let's just say that's 141, I think. 89 plus 54, 143. 143 divided by 89, you get the exact same number, 1.618, something like that, okay? So this 1.618 is a very, very, you can still see my screen, right? This 1.618 is a very, very important number in trading. And you will also see the price often respond to 61.8 or 1.618 in a chart. You'll see the price respond to 61.8 all the time. Now, retail traders got very, very used to this, and so it doesn't work so much, right? But let me quickly show you. I had a quick search online just before we did it. You can find Fibonacci absolutely everywhere. It's such a cool thing, really, if you want to get into it. Let me share my other screen. You can actually find Fibonacci in art. The most common example of finding Fibonacci on art, a golden ratio, is the Mona Lisa. It's why people find the Mona Lisa so attractive, because her face and her proportions and where everything is, it's all kind of drawn within Fibonacci's golden ratio. You can find Fibonacci in nature. If you look at shells or if you look at flowers, they all kind of have this golden ratio where the numbers and the measurements from one petal to the next all kind of relate to each other in a very, very mathematical way. You can find it in architecture. You know, everywhere you look, you can find this Fibonacci ratio. And to our eye, as humans, to our eye, this ratio is very, very, very attractive. They even use it in designing cars, right? When they're designing cars, they put all of the weight at the front. Sorry, they put the weight at the back, and they make the front nice and small. This is, I don't know whether girls find this attractive, but for us guys, for me, this is beautiful. Yeah, this is beautiful. Just the lines of this are really, really nice. And it's all based around, you can see right here, the golden ratio of Fibonacci. So that's a little bit deep in terms of what Fibonacci is and where it's used. But what's super cool about that is that even as traders, we find Fibonacci very, very useful, because the price often comes back to Fibonacci levels, So that is a little bit of an information about what it is. I know that was a little bit deep, but it's kind of cool sometimes just to know what Fibo is. Now, what we want to do, and the way that we want to use it, is we want to take Fibonacci from an area of a low point, from a low point to a high point. And it's really important to note that if you are in an uptrend, you want to put the 100% of your Fibonacci at the bottom. Okay, that's a real key. So we're going to take this one here, the bottom here, and we're going to go to the top up here. We're taking a low to a high, right? We're going from one low to one high. Now, because this is an uptrend, we want the 100% of the Fibonacci to be at the bottom. We want 100% to be at the bottom, and we want 0 to be at the top. So that would be how I would draw my Fibonacci, right? I draw my Fibonacci just like that. Now, the other thing Fibonacci does, it shows you the discounted price of the range. So if this is, I just took out some data, by the way, if this is 100% of the move and the price is going up and we can spot that we're in an uptrend, then what I want to do, I want to join that uptrend for the biggest possible discount. If the price retraces back to here, then effectively I have got a 50% discount, right? I've got a 50% discount if the price retraces back to here and then continues upwards. If it goes here and then continues upwards, I've got a 50% discount. If it goes to here, then I've got a 61.8. Can you see the 61.8 there? I've got a 61.8 discount, and then the price goes up again. Now, what happened in this particular example, why I highlighted it with an arrow here, is because I could kind of see with my eyes that we get a perfect 88% discount on this range to buy again. And if we play this forward at a reasonable pace, we'll see the price comes in to 88% and then it bounces. And that is probably the sweetest possible trade that you can find, when the price comes into 88% of the previous range and then starts to bounce off in the other direction. And as a trader, here's a really important thing. Once that price hits the 88%, it rarely stays there it doesn't stay there for long. Let's go down on the 1 hour chart. You can see that once the price hits there, the 88%, it's gone. It's got no reason to stay there anymore. Other reasons that we could go into, but not so important right now. But once the price hits the 88%, if it's going to go, it just hits the 88% and moves off in the other direction. You can even see, if we look on the 15-minute chart, you can even see it just takes two 15-minute charts and then two 15-minute candles, and then it's gone. So the 88% is something, that we've spoken about a lot. And I know that other people on this call know that I really do love that 88% discount range. Very important to draw your lines right, which is to go in the direction of the trend with the 100% at the start of the trend, right? Did that make sense, that part, Alison? Did it make sense?
Yeah.
No, you didn't sound positive there. That means
no. From the for an uptrend, you draw from the lowest point to the highest point, right?
The 100%, yes. From the uptrend, on an uptrend, let's make that really clear. Let me type it, because I really want you to get it. So from an uptrend, right, down here, think of it this way. You're looking at the cheapest possible place to get into the uptrend, right? You're looking at the cheapest possible, where can I get the biggest discount to get into this uptrend. If this was to happen again, where can I get the biggest discount for my entry? Like going to the sales, like if you're going to the sales in the shops. So this is 100% discount. If the price comes back into here and you get in again, you've got 100% discount on this move to get into the uptrend. Does that make sense? Or am I confusing you?
Yeah, it does.
And then here, so and you're at the top here. So the price comes back into here, you get a very, very good 88% discount to get back into the uptrend. And then the price keeps moving off in the direction that you want.
And in a downtrend, how would you do it?
Perfect. Let's find a downtrend for that. There's a downtrend here on Aussie Kiwi. All right. Oh, sorry. Okay, there's a downtrend here on Aussie Kiwi. This is perfect. So we would go, let's try and find a nice one here. We would take what we've identified is that this is a downtrend. It's really important to identify which direction are you trying to enter your trade, right? I'll come back to your question, Charlie. So it's really important to know what direction are you trying to enter the trade, right? So we've identified a downtrend here. And so what we're going to try to do is we're going to try to get into the continuation of that downtrend. So I would take my Fibonacci tool, and I'd start at the top of a downtrend and move to the bottom using the wicks. Now, you can see there's a lot of congestion around the 50% area. On the way down, there was a lot of congestion down here. But where we really want to get into the trade, the perfect place is 76.4 or 88%. Anywhere inside there is a super discount. You were right when you said it on your question. Anywhere inside there is a really lovely discount to get into this trade. So if the price works its way, goes shoot up back here, up here. If the price works its way somehow or another up into here, might touch this one or not, it doesn't matter. And then it goes down like that, then that's exactly what we want to see. We've managed to achieve a really, really good entry for the continuation of the down move. Right? Did that make sense, Alison?
Yeah, 100%. And I think this is where Charlie's question comes in. Like, what if it doesn't respect that 88% line and it keeps going above? What?
It happens regularly. All right, it happens regularly. You can see. Let's use this example here, and I can tell you for a fact. That I tried to get into a trade. Let me just see if I can find it on this. I tried to get into a trade from this low. This was a higher low to this high. And what did I do? I'm like, okay, we found a new range. Market structure is another thing. Once you understand market structure, it really, really helps, all right? But right now we're in a new range here from this higher low to this swing. And you remember I had this as a higher high, right? So I went from here. This is what I actually did. I went from here to the swing high. And I said to myself, okay, cool. If I can get myself a trade anywhere in this 88% mark, I'm nice. What I want is for it to come into here and bounce back and continue the uptrend. So I waited until the price came into this box here. I marked it up like this, just the same way as I did. I marked it up like that. I said, that's my area of interest. And boom, took away I don't need that anymore. The price came in. I'm feeling sweet. It's looking nice. It bounced away. Like this was the area where I got a little bit excited right in here. It came in, just went a little bit lower, moved away, got a nice reaction. How many pips is that? You've got from here, you got like nearly a 40 pip reaction. And then it started playing around in this zone. And what we know is that if we see it playing around in that zone, you need to just have the guts to get out. If you see it playing around in the 88%, it doesn't want to do it. Just get out and move on. And as you see, it continued lower. Now, the price does not always retrace to 88%. Look at this range here. From here, this is a new range from here to here. Let me clean this chart up so it's clean and clear for everyone. Okay, so this is a new range from here to here. So we can go from the top to the bottom, right? And we can see that in this particular example, the price didn't go anywhere near 88%. It just went up to the 61% of this particular range and continued going. All right, so you will not always get 88%, but if you do get it, it's the nicest possible trade. And I would recommend that we wait for the occasions when we do get into that zone of 76.4 to 88%, because those are when we're going to find the sweetest trades. Why are these trades so sweet? Let me tell you as well. These trades are so nice because when you catch them, let me go back to the this trade here. Right, here's another one that comes close, right? I'll show you this one in a second, but bear with me. Okay, let's go back to the one that we were actually using, which was this one here. All right, so we were actually using this as an example. All right, that's the one we were using. I'm just trying to make the chart clear. So we found the range. We went from the bottom to the top in an uptrend. Oh, sorry, I need that back. And then we put in our range. We want to get a trade somewhere in here. And that is the reaction that you want to see. Me and Rob were talking about this the other day. You don't want to trade the first one that comes in. Be really, really patient. Be really patient. You're going to see the first one come into your area of interest, and you're going to be like, yeah, good. Let me go. But oftentimes, if you can wait until the second candle, you're going to get a much nicer entry. Now, what can you do with this entry? Let's look at this from an exact trade. When you get into this, like I said, it doesn't always come back into 88%, but when it does, it gives you the best risk to reward, because now you can actually put your entry at the 88% and you can put your stop somewhere below the last. It doesn't even have to be far below. It can be somewhere below. Below the wick is really, really safe. Some people say below the body of the last low. Let's take the best case example. We'll put the trade below the body of the last low and go back up to the equal high. Right, we'll go back up to the equal high, which is here. All right, you've got yourself a 15-to-1 trade by being patient. What does that mean? It means if you risk £10, you're going to get back almost £160 from that risk. It's a phenomenal risk to reward, and a really, really great way to trade if we can have the patience to do it. The problem is sometimes you're going to miss them, and you'll be like, oh, I missed the opportunity. I was right, but I missed the opportunity to make money. Let's move this risk to reward. If we move the risk lower to below the wick, if you move it to below the wick, you still get 6.5 times your money. So £10 risk, and you get 65 £65. Still a very, very good risk to reward. So I do like the 88% area. We don't always hit that price, but it is a really, really nice feeling when you get those trades. If the price touches 88%, how do you know it won't continue down and that it will turn back around? Let's just say there are other reasons as well why the price often comes into here, to do with what's happening over to the left of it, inside here, right? It's to do what's happening inside here, and we can look at that. We can look at that in another week. When we're trading this style of trading, which we call smart money, which we call price action, or which we call institutional trading, they leave clues. The banks leave clues everywhere, and often the 88% is to come into and kind of break even on an area where banks have been in the past. I'm not going to touch that issue today because it's just long-winded to start that conversation right now, but I will definitely do it. If somebody, Charlie, if you want to ask me that question, why does the price often come into 88%? If you want to ask me that question early for next week, then I would love to cover that off for you. Lastly, we were talking earlier about moving averages, and you noticed that I have 8 period moving average, a 13 period moving average, and a 21 period moving average. Do you all see why I have those moving averages now? Can you see? Can you guess, having just covered this topic? Can just tell me why I chose those numbers for my moving averages? I'm not going to tell you.
Fibonacci.
Yeah, exactly right. Who said that? Rachel.
Yeah.
Yeah. I choose those numbers, 8, 13, 21, because they are Fibonacci numbers, and the price just tends to respect these areas. 55 is always a good one, or also a good one, and very commonly used in the in trading as well. Alison, please let me know if that kind of answered your question, or if that really did answer your question. I want to make sure that you really get the value out of that.
Yeah, I did. Just one last thing, Leon. Would you do that on as I can see you're on the 2-hour chart, so would you use a Fibonacci usually on a 2-hour, or you'd use different time frames basically?
Yeah, I definitely play around with it on different time frames. So the way that I trade is that I'm trying to find the longer time frame direction, and I'm trying to enter my trades on the shortest possible time frame. That's just how I try to do it. So I look at the longest possible time frame. Where is the market going? We are in a clear and obvious uptrend at the moment. Looks like things are turning a little bit in cable, but we're in a clear and obvious uptrend. So I look at the longer time frame chart. Where are we going? And then I start to drill down into the 1 hour and the 2 hour and say, well, how can I find a trade that's in line with the overall direction? But yes, Fibonacci works. I mean, I'm telling you, let's look at the 5-minute chart, right? Let's look at the 5-minute chart. So, and you can chart this out. Let's try this one. Chart this one out. This is, remember, lower time frames are weak, right? Longer time frames are strong, but we are in an uptrend. Here's the bottom. Here's the low of this time frame to the high of this time frame, right? You can see how it touches perfectly. Another way to think of Fibonacci is the obvious areas of support and resistance. And you can see very, very clearly how the first area of support comes in at 38.2. Then you get a bit of support at 23. I don't use 23 very much. I need to take it out. But you can see that this is an area of support and resistance. So why don't we just look into our deep, what I call our deep value area. That's our deep value area right inside there, 76.4 to 88. And let's see what happens. Let's just watch it, see if we get a movement inside there. The price action looks a little bit weird to come back down into there, but let's see. Let's see what happens. I hope that helped, Alison. Very good question.
Yeah, it did. Thank you so much.
Anyone else got questions on Fibonacci? Don't be shy. Does that mean that everyone understood it?
Well, okay, I've got a question then.
Yeah, come on, Alison. Come on, girl. Love you.
Sir, I'm just really trying to master this. You know all the lines and everything, right? Do you necessarily need every single line, or could you just delete it down and leave it to the 618, 76, 88?
Brilliant question.
01?
Yo, Alison, don't stop asking questions. All right? Don't stop. All right. So listen to what we. I'm just trying to find a really nice thing to do on the chart. So let's go from, this is Friday. This happened on Friday. I don't know if any of you are watching the chart when cable spiked higher. All right. So boom. We see, look how it comes in perfectly to 31.8 again. All right. I don't trade 31.8. I think the value is not good enough. But this is how to do it. Once you've got your Fibonacci drawn, click on it, then go down onto settings here, and it will bring up this. It will bring up this view. It looks better in white. How do I get the light theme on again? Wish I could get the light theme. Light theme. Appearance. Okay, I'll do it later. Okay, cool. So this is what you do. If you go into the settings of the Fibonacci retracement, you can take out certain numbers. And I would recommend that for now, you only leave on the Fibonacci retracement, leave on 32, leave on 50 if you're writing this down or taking a screenshot, 61.8. You can even take out 61.8. To be fair, it's up to you. Retail traders love 61.8. So I leave it on there just to see where the retail market is. But for us, we definitely want to be trading in between 76.4 and 88%. Right? 76.4 and 88%. Is that cool?
Yeah, I got that.
What you can also do is, I just like to see the levels in percent, right? So I know that if it just, I don't know why, you can take this off and go in values, and that will show you the actual values here, like 76, 0.7648, 0.88. I just like it because in my head, I think, okay, cool, it's in percent. So if I'm going to get a trade that's somewhere at this line, I've managed to find myself at 88% discount on this move. And if the move continues, I've got in almost for free. It's like a low risk trade. So I just like to keep it in percent. It helps my head a little bit. Keep those questions coming, Alison. You're a student today.
I'm actually looking at what you're looking at, and I actually took a trade on GU earlier.
Yeah.
Using the Fibonacci, but this was around, let's see, on my MT4 it was 10:15.
Mm-hmm.
So it was right, it's that huge candle there, the purple huge candle going up.
Yes.
It must have been sometime after that.
Right.
I don't know.
Now this is very interesting, and I really want to make this point. Personally, I will never use Fibonacci on its own as a reason to trade. And I really thank you for making that last statement, Alison, because it's something when I was thinking about the response, I think I actually wrote it down, is that I will never use Fibonacci on its own. It shouldn't be used on its own as a reason to trade. It should be used in conjunction and in confluence with other factors that are happening in the marketplace, right? So let's use this as an example here, and this is a really good point. I want to make this very clear actually. So we've basically gone in an uptrend. We've got our starting point here in the uptrend. We've got our exit point here. What we're looking for is a trade in the deepest possible value somewhere in between the 76.4 and the 88%. So we can take off the Fibonacci once we've used it, and then I remove it because I've got and I actually mark this oftentimes on my charts. You'll see this marked as an AOI. I mark it and leave it on there. I know what it means now, so not every single time, but I mark it as an AOI. Right, that's how I leave it on my chart like this. Right. Now, what does it mean to me? It means that, and this is where you really start to get patient and where you really start to get the best of value trades. It means when it comes into that area, it's not a go trade right now. This is an area of interest that I'm looking at. I'm trying to find a trade when the price comes into this area of interest. If this remains the range, you use Fibonacci with ranges. So what am I looking for specifically? You know, I'm looking, can you see how this is my area of interest? And I brought it across to see what's happening in this area over here in this candle. So for me, with this being my area of interest using Fibonacci, I'm actually looking for a trade either right here, which is just below the area of interest, or I'd even put, on this time frame, I'd look for a deeper one. I'd look for a different one on a different time frame, or even just a little bit lower. But with this, I like this trade right at the top of this wick here. So it's an area of interest. This is nice as well. It's an area of interest. It's not a guaranteed trade. Here's the reason why, and I'm only going to touch on this very, very briefly because we do need to look at it in more detail. Have you studied imbalance? Has anybody studied imbalance? Do you know what that is yet? And I don't want to go too deep. Has anyone studied imbalance? Please talk with me. Let's make this interactive. Has anyone studied imbalance?
Nope.
Anyone else?
Not necessarily, but I feel like it's that huge candle there. So like the market needed to make up for it some way.
100%, yeah, exactly right. This huge candle here is a problem. It's like the market has moved in one direction too quickly without an equal number of buyers and sellers. All right, the market has moved too quickly. And so ultimately what needs to happen, I deleted that, maybe I should put that back. Ultimately what needs to happen is that the market needs to come back in and close off this trade. We need to see a wick. Let's just imagine that we had a wick, that this wick here, imagine that none of this had happened, and that this wick here dropped all the way down and matched the one on the other side of the candle. Can you see that? I'm going to take this off to make this clear. Right, so imagine, sorry. that these had not happened yet, and that this candle, although it's an up candle, the price dropped and matched on the other side. Can you see how this here is matched by this here, that they're on the same level? Can you see that? Everyone can see that, right? Well, that didn't happen. And so there are too many buyers here without enough sellers to balance the market. So when I'm looking, using Fibonacci, let's go back and do exactly what I did right now. And this is how you use Fibonacci with confluence, with additional pieces of information. We did our measure from the bottom to the top of the range. We identified 76.4 at the top with 88% at the bottom. And now we've got this as an area of interest, not a trading, not a time to trade, but an area to watch closely. So you can put an alert on here. You can be watching the chart if you're watching it in the days, or however you do it. Alerts are really, really good. But when it comes in here, what I'm looking for is for the price to come in and lock this door. I want to see the price literally. And what's the difference between here? It's 135.84 and here 135.88. It's simply 2 pips difference between this, the candle on the other side of the big purple one, and the price coming in here to lock that door. So although this is my area of interest, I would be looking for it to drop a little bit lower to get the perfect possible trade with a stop loss below here. That's what I would do. And my trade would actually look a little bit like this. My trade would actually look a little bit like this, right? So you see that the open is at the top of this. Can you see the candle that I'm talking about? Can everyone see? The open of the trade locks the door here, closes what they call closes the imbalance. I'd have my stop loss just underneath here, and I would target the equal high right back to the high where we were before as one trade, and get myself an 8-to-1 trade. If it works, who knows? It doesn't always work like that, and sometimes you lose money. But if you lose small, and if you win big. We should be happy to take this risk. As traders, we should be happy to take a risk that gives us 8 times our money. We should be happy to jump on that. Yeah. Does that help? So I've shown you how to use Fibonacci with something else as well. If you are kind of learning FX, not a bad way to use the 88% as a place to enter. If you're learning FX, if you're new to the game, it's not a bad place to say, well, okay, I'm going to use the 88% as a place to enter my trade. If you're new and building up your skill set. But the more and more you get into it, you're gonna use Fibonacci with additional pieces of information, like the closing of an area of imbalance. All right, that you'll use it with different pieces of confirmation as you kind of progress on your trading journey. I hope that's clear and respectful. Talk to me, family. I hope this has been educational. I hope this has been useful today.
Yeah, definitely. Yeah. Right.
Yeah. Alison, you've been okay with your answers? Have I helped?
Yeah, 100%. So, just to back what you were saying, this morning, this trade, I might have drawn it differently, but anyway, I caught 50 pips. But basically, I used the Fibonacci in conjunction to trade the harmonics kind of called out, but I didn't quite enter it until it hit the 88. So where that little box you've drawn up on the right, so that down,
which one?
just a bit, yeah, just to your left a bit.
Yes.
Yeah, so you see that downwards movement. Yeah, so that's where I caught it. So I caught 50 pips there because the harmonics kind of called it.
Called
and then I waited.
Called the buy or the sell?
It called a sell. So that's exactly what I did. So that's why it's a bit confusing, because it's like, I don't know, but maybe we can cover that next time.
So the harmonic scanner called a sell, yeah?
Yeah, at the top there.
Up here.
Yeah, so that's when I waited for it, and when it reached the 88%, the way I drew it, then I caught a sell at 50 for 50 pips today.
Then you closed your trade at 88%.
No, I got in at 88%. So this is it. Like I don't know how, because I don't know.
Yeah, I'd love to see that one. I'd love to see. I'll have a look on the harmonics actually and see if that one's still there. so I can work out why it called it. I'd like to see why. I can't see, my eyes can't pick up the pattern naturally, so
Yeah.
I can't quite see the pattern, but I'll have a look. But whichever way you look at it, 50 pips is 50 pips, and you use the Fibonacci, and you got your entry at 88%, which is probably better than the information you picked out of the harmonic scanner, right? It's probably,
Yeah, 100% it was.
yeah, so you use, that's perfect, because you've used, okay, well, here's one piece of information coming from the harmonic scanner. Let me back this up with another piece of information coming from the Fibonacci tool. You chose to take your trade in a better slot than what the harmonic scanner was actually giving out to you. Perfect. You can't do better than that. That's absolutely brilliant.
Yeah.
Absolutely brilliant.
Thank you, Leon.
Yeah. Guys, listen, there was a point in today's session when we got to about 35 minutes, and I was like, okay, we're done. Let's wrap up. We do another Money Monday next week. But it went on, and I really do hope that it was useful. Do me a favor, just jump on the ice chat if that was useful for you, and let's see if we can get more people on for next week Monday. Okay, let's see if we can get more people on. I mean, as we always know, all of us on this call want to experience that residual income check of $2,500 a week. We're all going for that chairman 10 position, but I strongly believe that if we can do that in conjunction with solid trading skills, it's going to accelerate our journey even faster. All right, so we've got to use trading as the basis for telling people that and proving to people that this lifestyle really works. All right, so let's get it. Jump on the ice chat. Let us know if this was useful for you, and we will be back again next week Monday, either at 6 or 9. Alison, let's have a chat if your Seychelles team will jump on if we did this earlier, but we'll find a regular time for this slot. Okay,
Alrighty, will do. Thanks a bunch, Leon.
thank you everyone. Have a great night, and we'll see you next week. Okay, have a good one. Take care.